Well, how should you view the stock market in these tense times? Today we're going to take a look. Stay tuned for Prudent Money. Good afternoon. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thanks so much for joining me today. You know I do appreciate it. Well, there are a lot of things to raise anxiety levels these days. How do you deal with investment stress? Well, today, Chuck Bentley, CEO of Crown Financial Ministries, is here to discuss. Chuck, always great to have you on the program.
Well, thank you, Bob. These are anxious times, aren't they? My goodness, what a great topic for the day.
Well, I tell you what, and we'll of course we'll talk a lot about what's going on with the market. In your many years of being an investor, me as well, just can't even believe what's going on. I mean, it's just there's just so many dynamics and moving parts that can create a lot of stress.
Yes, I've heard someone say that the term AI that we use all the time now probably shouldn't stand for artificial intelligence. It should stand for anxiety increasing technology.
Yeah, and there's not just a whole lot of things to worry about these days. Let's talk a little bit before we jump into that. I do want to talk about Trump accounts. It's funny, Chuck. We set an agenda for things we want to feel led to talk about, and there's just things we never, month after month, we never get to because we are talking about something else. Trump accounts is one of the things, and I wonder how lost in the news this concept has become, because it's like, it was talked about, and there's so many other things in the news to kind of steal the time away from it. But let's talk a little bit about what the Trump account is and how it fits into the broader landscape of long-term investing.
Well, I think one of the reasons that it gets lost in the news, this particular innovation has a specific target audience, and it's for young people. I can't remember the age brackets, but I think it's your child to be eligible has to be born between January of 2025 and December 31st of 2028.
Sounds
so that
right.
That really narrows down the people who are qualified and are interested in this. But it's really a phenomenal opportunity. The idea is that you open the account, and you can do it when you file your tax return and just check a certain box and say, I'd like to start my Trump account, and the government will put $1,000 into that account. The parents can put up to $5,000 a year into the account, and one of the very interesting things that distinguishes it from others is they have a rule that says qualifying organizations may make additional contributions that are not counted towards the $5,000 limit. So charities, for instance, could put money into these accounts. Maybe an employer could put money into these accounts. So you could really swell up the value of them over time.
Right.
And of course, the child can't touch them until they're 18 years old. And the idea is that it is a fast, quick start to teach savings and to have money that's actually invested, not just sitting in a passive bank account, but it's invested in growing and increasing so that the child can get ahead by the time they're 18 years old.
Now, there's quite a few different accounts that you can set up for a child, for college, and for other financial goals. Talk a little bit about how this is different from maybe a 529, maybe a Roth IRA for minors, a couple of those options.
Well, Bob, I'm not a certified wealth advisor as you are, so I think you'd be more qualified. But certainly a 529 account has some restrictions on it. It's intended to pre-fund future education, where a Roth IRA doesn't have those restrictions on it. Now, some people are saying that the Trump account is sort of a hybrid between a 529 and a Roth, but I'm not sophisticated enough to be able to articulate those differences.
Well, let's talk a little bit. You prefer to call it a children's jumpstart account. Talk a little bit about that.
Well, when I was a child, I opened a passbook savings account. And I remember I had a little book. It looked like my passport,
Yes.
and it had a little ledger. Did you have one of those, Bob?
Yes, I did. That just brings back a flood of memories when you said that.
Yeah, my dad took me to the bank, and I learned to put some of my allowance in there, and if I had a little extra money for mowing art, and I would watch it, grow. And I think this is the same idea, except it's more like a passbook savings account on steroids, because
Right.
it's actually money that's, I think, invested in the S&P 500. So the idea is to give children a jump start in life. I think if they'd have named it that, people have understood it a little bit easier, that you're really just giving your child a head start. So I think everybody listening to us qualify. If you have a grandchild that qualifies, you really need to do it. There's no reason to miss out on somebody offering you $1,000 to set aside for your child or grandchild.
Yeah, and I think maybe sometimes people get hesitant because, oh, what are the strings that are attached to it? But this is, you don't want to turn away free money. The same concept we talk about with 401k plans and employers. If they're giving you free money to put money into the 401k plan, at least put enough back to get that free money. I mean, it just makes common sense. Now, having said that, it's also kind of scratch your head a bit and say, well, why are they doing this? And they're doing it for 3 years, and then the plan goes away. That really does make no sense. I would have thought that there would be a longer time frame that fit more kids, and so that doesn't make a whole lot of sense.
Well, I think it coincides with the political term, term in office.
You said it, not me.
Anytime a politician does something, follow the money. They've got motive. I think it's probably certainly to get favor and to be looked upon favorably in the eyes of young voters that have children that age. So, great. I like the idea. I think that if that could be one motive. Another motive would be to precede future economic growth. Because imagine if these children are very disciplined, the parents max out the account, it's invested wisely, and this child, when they're 18 years old, you say, guess what? You're not broke. You can buy a house. You have the money for a down payment. You can fund a college education. All of those are good things, and frankly, the kind of thinking that we need for the American economy to break our dependence on debt. I like this idea much better than funding college educations on debt or racking up debt, buying cars and houses when they graduate from high school.
I saw an interesting article, and I think it was Market Watch talked a little bit about it the other day, and you had the child get the $1,000. You had the parents put back the $5,000 per month up until 18. Then they waited till age 24 to convert the account to a Roth IRA. They paid the taxes. I think the taxes were like $43,000. If a child would have done all that, parents would have participated, made an average of an average of 7%. Thank you, a year. That would have turned into $59.5, $3.7 million.
Yeah, and then Kiplinger did a report with just compounded return on the additional $1,000 that they could see $490,000 when they first lay their hands on it. And I don't know about you, Bob, but going back to our passbook savings account, see those kind of numbers.
Yeah, I was thinking more of a nickel here, a nickel there.
Oh, me too. I still, I think my baseball cards were worth more than my passbook savings account.
Yeah, wouldn't you love to have, or you still may have them, I still have a box of 1970s baseball players. Unfortunately, none of them are worth the kind of big money that you hope for, but it's still fun to have them. Did you collect,
Yeah,
I guess you collected baseball cards?
Yes, I did, and I thought all of them that my mom threw away were probably the Mickey Mantle rookie. But I don't think I ever had that card. But today I think, oh, maybe I did. Who knows?
Well, one of the things that can be kind of problematic. I mean, it's a good thing. The parents get real wrapped up into building this account, putting money back in this account, and don't put their own retirement needs in front of what they're doing, and it's kind of just follow the focus on the child. Why is this a critical order of operations? I mean, that a parent really needs to establish, well, this is for our retirement first. And you see a lot, and I've been guilty of this as well. I mean, you see a lot of times where parents do kind of make that mistake or make that choice. We'll say it that way.
Bob, we all tend to spend money for our children and deny ourselves in almost every area. Most every parent wants a better life for their child. And I understand that, and we've tried to live that way. But at the same time, when those oxygen masks drop on an airplane, it says, please put yours on first and then help your neighbor. And, to model good financial stewardship, I think we've got to do it and not just talk about it. And so we're recommending that the parents are wise in setting aside money and investing money alongside starting these accounts for their children. And that way you're able to not only help your child, but watch what happens to you over that same 18-year period, that your money will grow and your capacity to serve and to give and to do the things God wants you to do is also increased. So don't do it at the expense of your own needs, and also by doing it just to show them instead of, or just to do it for them instead of show them that you've done it as well.
This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Chuck Bentley is here today to talk a little bit about some of the craziness going on in the world, and we'll cover that here in just a minute. But if you want more information about Chuck, you can go to crown.org and check out the books he's written. I'm trying to get him to write another one, but he's just not listening to me. But we'll talk about that maybe next week, Chuck, if you want to talk a little bit about some of the black swans.
Well, you are a big encouragement to that, and I think you about got my attention. I've been studying some of those trends, and I definitely need to update what's happened to those trends because all of them have remained relevant.
Yes.
I would never consider myself having a prophetic voice, but when you watch what's happening and you compare it to Scripture, you can project the likely outcome of some of the things that are in play right now. And we're seeing, the increase of democratic socialism. The Gallup poll last year showed that 39% of the population now think that's a good idea. Only 54% believe capitalism is the best model. And so that's a very dangerous trend. I want to update on that. And maybe the next time you and I talk, I'll have a little bit more prepared update for you.
Yes, that would be great. And, something else, too, that I was thinking back that a lot of the interviews we've done, we've talked about these topics. And I've always kind of in the back of my head, I would always say to myself, yeah, that makes sense. So I definitely think that's going to happen. But at the same time, I look at it and say, boy, it's going to take a while for that to kind of build and get enough momentum to actually happen. But Chuck, I don't feel that way anymore. As we've gone, I mean, if you look at how this economy and just this whole country has changed, dramatically changed, just in 3 or 4 months. You know what I mean? It's just these things don't need that much time to take over.
Well, some people call that a tectonic shift, where you feel like the plates of the earth are moving underneath you. It's not just a cultural shift, but there's some foundational shifting, and there's certainly been a lot of people talking that way. The reality of it being implemented is still a little bit questionable. I read an article last week that Goldman Sachs analyzed the AI revolution, and they said that billions and billions of dollars is now flowing into AI development, data centers, building private electrical generation power sources, All of this is happening, and they said the economic benefit to the United States GDP is presently zero.
Yes.
Zero.
Yes.
And that was a sobering analysis. And I think what they're trying to say is maybe there's a bubble around this right now, and it's propped up the market. It's made it look super red hot. These multi-trillion-dollar valuations on something that is yet to make a difference in very practical terms. So it is an uncertain time, no doubt, Bob. The framing of your question when we opened was investing in uncertain times, and I would say we're definitely in those.
Well, I'll say to add to what you're saying, I totally agree. I think that the problem is that this technology, all of the AI strategies have gotten so far away from us that there's just not the opportunity to see that investment go to work and make money. So it's going to be interesting. I think that there's some real stark similarities between today and 1999 when you had the internet blow up and everything. So we'll see. It's definitely interesting times. Well, let's jump into that. Investing in uncertain times. I was thinking that and I don't know how you are with this, Chuck, though. I really watch a lot of the news, especially in times like this. And, just the trying to figure out what's happening. And President Trump said this, and Iran says, no, we never said that. And it just adds to the angst. What do you advise for people to do when they're dealing with this kind of stress?
Well, I think uncertainty is stress-inducing, no doubt. We all want to feel like we're able to make wise decisions based on known information. When information is either murky or we're living in a time when so much of it is fake, and I could give some examples of fake news and fake information that's been pretty convincing. It's frightening to think we don't know what's real and what's not real. But I think the reason the Lord told us it's not our home, and we need to see this as a temporary journey. We're just pilgrims passing through. And He encouraged us to lay up treasures in heaven. Now, Bob, getting to heaven to me is like, that's the ultimate. That's like, I don't know why He would add, and then after you get to heaven, there's treasures. Like, that doesn't even seem necessary to me. And it's like, really? Why do I need treasures in heaven? But I think what He's trying to do is say the treasures on earth are so compelling, but there's some better. And I want you to think about those treasures and to live your life for things to come, not for the temporal tokens here on earth, so that we don't get deceived. We don't get so fearful that when those things are gone or they're lost or they're destroyed or they're stolen, that we don't lose our bearing. And as believers, we can be rock solid confident that God's promises are true and they're real, and we can rely on them, but not what we're reading on the news. And I love to read the news like you do, Bob. I think it's important to do that, but we have to filter that through God's Word.
One of the issues that's going on right now, and it just seems like it's kind of snuck up on us, but it's growing fast, is inflation. And this is you've described it as an invisible tax. How does that reshape the way families should think about saving, about investing, and about debt? I mean, there's already an incredible competition for the money that comes into the family into the family bank account. But now, you probably grocery shop every once in a while. I do as well, and I go in there just shocked at how quickly these prices are going up.
Well, we had a $1 per gallon increase in oil in March. $1 went up for a full dollar at the pump. Well, that's inflationary, but everything that's transported that we buy is impacted by that price. So it comes here on a truck or on a ship or on a plane. Everything has to go up to offset the cost of that fuel. So inflation means that our dollar is losing purchasing power. It can't buy as much as it used to. And there's really only two good hedges against inflation. One is to consume less during inflationary times. Try not to be in a position where you've got to buy the things, especially big ticket items, that have been inflated. And if you can wait and pause, then you can get a better deal when you're experiencing deflation. You know, it's always better to buy low and to sell high.
Yeah, there's one of the things that's just come to me over the last couple of weeks is the opportunity, and I know you've got boys at the house. I've got boys, my boys as well. They bring it up a lot of conversation because they want to know what's going on, why it's happening, and what a great opportunity we as parents have to really kind of give them a little bit of an education of what's going on.
No doubt, and a real lesson in economics. They say, I always tell my boys the difference between a recession and a depression. A recession is when my neighbor loses their job. A depression is if I lose my job.
Right.
So economics is a real thing.
Yes.
And it's good to teach our children. But the second way to hedge against inflation is to own assets that improve their value when everything's inflating. If you don't have assets that go up during inflation, then you're simply being penalized, you're being punished by it, not rewarded by it.
Yeah, and I think that, this is such a new environment that we're not used to. I mean, when you start thinking about, at least I think we are, literally at war with Iran. And, this can take a lot of different pathways. And it's just going to be really interesting to see. But I think that you'll agree the last thing you want to do is be watching the news, talking to coworkers or whatever you're doing, and decide to make emotional decisions. That's the absolute last thing you want to do.
Yeah.
There's a lot of things going on and a lot of things to fear, and we just have to think about stewardship and making good, sound decisions.
Well, and to avoid making foolish decisions, which is to be motivated by fear or greed.
Yes.
And so often we do the very opposite of what good investment principles would tell us. We have to hang on during periods of fear, and it's actually a good time to sell when everybody else is greedy. But when everybody else is fearful, they're leaving the markets or they're fleeing their investments, then you want to withstand that temptation to react emotionally.
Well, it looks like we're going to have quite a few opportunities to do that. Strengthen that confidence. Well, Chuck, always great to have you on the program. I appreciate the fact that you put this time back for me and the listeners to come talk a little bit about what you're seeing and what you're thinking, especially from a stewardship standpoint. Once again, if you want more information on Chuck, go to crown.org and check out some of the books that he's read. That he's written. Great information, great stuff, and it's all there at crown.org. Well, Chuck, good talking to you, and we'll catch up next month.
Well, thank you, Bob.
This is Bob Brooks. If you have a question for me, please go to the website at prudentmoney.com and send it in because we are all out of time. Till we do meet again next time, keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.